Okay, good morning, everyone.
Good morning,
This,
sir.
yeah,
Good
good.
morning, sir.
Yeah, good morning. So you're welcome to,
Yes, sir.
good morning. So I welcome you all to our pricing analysis. So we need to get to work immediately. So this is the November 2025 pricing. So what we want to do today, I've already documented everything here, is we are going to read this pricing. I believe you should have also read it. I've done the summary of it and the expected unseen based on what is contained in this pricing analysis. And also we're going to look at the reports like that. But what we're going to discuss, my approach to analyzing it is the report I've done and the expected unseen. However, they can come from different angles. So from the preceding, I mean, we can predict the direction they will go. And it's two direction in terms of how the question is going to be set. So the first of it is contained here today, which we are going to look at today. We are going to look at another way the examiner could look at it, another way the unseen could come, which we're also going to look at next week. Now, next week, in the sense that you should have mastered this very well, get used to it, and just focus on this because this is your exam, anyways. So we'll look at that, another variation next week, that will look at another way the examiner could also come, which is which is completely different from what we would have looked at today. So when you get to the exam, however they come, is going to be within what we would have discussed in this present. So this document, of course, you're not expected to take this to the exam hall. They would give you again, you see it in your exam booklet. So as you can see, this first page is telling you that this material is available online and don't bring it to the exam hall, right? They will give you the complete documents, the complete question in the exam. And again, you'll find this how what they want you to do, understanding the information, structuring problems, applying judgments, conclusions, showing that you have multidisciplinary skills, applying different knowledge you have. And of course, your appendix must be properly presented in the document. So, and as you can see, they allot 20% for executive summary, 10% for ethics. So you don't want to joke with those two parts of your report. And yeah, so let's go straight to the report now. So this report is about Fulak Motors Nigeria Limited, Fulak Motors. Now they give us 5 exhibits. Exhibit 1 talks about you are now Sylvester Shukudi. So get used to this name because that's where you are till your present, till your exam is over. All of you are now Shukudi. And your employer is Bagudu Ademola and co-chartered accountant. And exhibit 2 is the Nigerian economy and the service sector. Exhibit 3 talks about analysis of the motor vehicle sales and distribution business in Nigeria. Exhibit 4 talks about analysis of motor repair service centers and spare part sales in Nigeria. Exhibit 5 talks about the unaudited summarized 2023-2024 financial statement. So now that you are all Shukudi, so I need 5 Shukudi that would volunteer to read Exhibit 1, and I need people that will read it sharply and very clearly. And after which we're then going to start our analysis. So the approach we're going to use today is you have to participate, and it's going to be like 2 hours class or less, depending on how fast our analysis goes. So I will need somebody to read exhibit one. I will need another person to just make comments on it, short comments. I will need somebody to read exhibit two. So I don't want to finish exhibit one and start selecting who will read exhibit two, and we are now waiting. So I need for volunteers now. So who will volunteer to read exhibit one for us?
I'll read the exhibit one.
Okay, we will to read exhibit one. Great. Now,
I
who
read
will
exhibit
do
two.
exhibit two? Okay, Aliyah will do exhibit two. Don't forget, so I won't have to call you. Who will
I
read
can read
exhibit
Exhibit
three?
three.
Exhibit 3.
Okay, along to say Ibrahim will do exhibit three. Who will go for exhibit
Exhibit
four?
So I'll
4.
read exhibit 4.
Joy, read
What the hell?
exhibit
So many
four.
people. I read
And who is
Exhibit
going
5. But there's no
to do
Exhibit
exhibit
5.
five? Oh, you read exhibit
Exhibit
five.
5 is
Now,
financial statements.
okay, so because Agoze, you are going for the easy one, right? You see what you're going to do. You are the one that is going to analyze exhibit two for us, right? When the
Okay.
person that has read it reads it, you would make one or two comments around exhibit two, your understanding and the potential things we should be looking at for from exhibit two. There's nothing to analyze in exhibit one, really. So who would speak on exhibit three when the person reads it? Anybody that wants to volunteer to speak on exhibit three?
Me, I'll do it. I'll do exhibit
Okay,
3.
okay, great, great. Fashion return. So who is going to speak on exhibit four?
I'll speak on exhibit 4.
Great. All right, I think we are good to, and I need somebody to do a short analysis on exhibit five. Who can do that?
We'll do that, sir.
Okay, great.
Hello.
All right, great, great, Ajibade, great. Okay, so let's get to work immediately. So I believe we should be able to do this under 30 minutes. I want us to spend more time on the report itself, the unseen, right? This is just the pre-scene. I want you guys to be used to this so that when you get to the exam, you're already used to this. Like you need to put yourself, you need to see yourself as Shukudi from now till next week Thursday, upper week Thursday, when you're going to be sitting for the exam. So, okay. Um, Sylvester one, let's go. Who is doing exhibit one?
I'm the one, sir.
Okay, good. Okay.
About you, Sylvester Chukudi, and your employer, Gbagbodu Ademola and Co. Chartered Accountant. You are Sylvester Chukudi, an accounting graduate, writing the professional level of ICAN examination. You are employed as a trainee in the firm of Gbagodu Ademola and Co. Chartered Accountant, reporting directly to Dauda Bagodu, a partner in the firm. Your position requires a proactive approach to client services and technical competence in accounting, financial analysis, and business advisory. Key responsibility: 1. Preparing of financial analysis and reports. You are tasked with preparing detailed financial analysis and report regarding the performance of the firm's clients. This involves gathering relevant financial data, performing rigorous analysis, and presenting findings in clear, structured report to facilitate informed decision making. So, analysis of financial statements. Your roles include analyzing clients' financial statements to identify area of weakness. Upon identifying this and anomalies, develop and recommend likely solutions aimed at correcting deficiencies and improving financial health. 3. Assessments of business proposal. Assess various operational and strategies business proposal, evaluating how each aligns with the client's objective. Additionally, consider the impact of this proposal on the client's business and financial risk to ensure recommendations are both practical and strategy. 4. evaluation of forecast and assumption. You are also to examine clients' financial and business forecasts, scrutinize and assumption upon which they are based. This is to enable you form well-grounded judgment, draw reasoned conclusions, and make relevant recommendations tailored to the client's context. 4. 4. Strategy task planning advice. Provide advice on strategy task planning, guiding clients towards approaches that result in optimal task liability and compliance with relevant regulations. 5. Drafting analytical report based on your operational and strategy business analysis. Draft comprehensive report for your line report review, ensuring that findings and recommendations are clearly communicated and actionable. To effectively fulfill this responsibility, you are to keep abreast of development in the accounting and taxation sectors, as well as the matters relating to business sustainability, both at national and international scale. This commitment to continuous learning ensures that your work reflects current best practice and supports the firm's clients in achieving their objective.
Sharp. Good. So, you would always, this is always the first page, and it's generic, and they bring it like this every diet, and basically it's showing you what you would do every diet. You would do financial data analysis. Basically, in this precinct today, we're going to be using MPV and IRR and probably sensitivity analysis. The one we're going to do next week, the other variation, we're going to be using contribution per limiting factor analysis and all other financial data analytical tools. Of course, you always do ratio, trend analysis, and all that. Basically, ratio analysis to analyze and be able to speak to the figures there. And you would assess their strategic directions using models. Ansoff, Pestel, Swartz, Potters, Vifors. Those are the popular ones that you majorly find in your exam. And also, they could give you forecasts, budgets. You just speak on the direction of the company. And seldomly, in this case now, we don't have any tax planning advice for them based on this precinct. So we hardly speak on this in most cases. Then, of course, the report, which is the important part of your work also, your ability to put in writing your opinions, your discoveries, your analysis, your recommendations, your conclusions. So this exhibit 1 of the precinct, which will also be in the unseen, you also find it there again, where they will now structure it in form of a requirement, shows exactly what we need to do, which is exactly what we are going to show you this morning. So thank you very much. So now, let's move straight to exhibit 2. Let's talk about the Nigerian economy and the service sector.
Okay. Exhibit 2, Nigerian economy and service sector. Introduction. The Nigerian economy, one of Africa's largest by GDP, is driven by a diverse array of sectors, with the services sector accounting for a significant share of national output. The motor repairs business stands out as a vital subsector, supporting the country's extensive road transportation system by ensuring the functionality and longevity of vehicles used by millions of Nigerians. The structure of the service sector in Nigeria. Nigeria's service sector has experienced significant growth over the past decade. According to the National Bureau of Statistics, the sector contributes over 50% to Nigeria's GDP, outpacing agriculture and oil in recent years. Its components include trade, transport, real estate, finance, information technology, professional services, and personal services. The motor repairs services subsector. Motor repairs, while often grouped under trade and personal services, represents a critical link in Nigeria's transportation value chain. As the country's urban center Uh, as the country's urban centers expand and vehicle ownership rises, the demand for reliable professional motor repair services has surged, creating opportunities for entrepreneurs and skilled technicians alike. Key features affecting motor repairs. The following are key features of the motor repairs subsector in Nigeria: informal versus formal enterprises. The majority of motor repairs businesses operate within Nigeria's vast informal sector, characterized by small-scale workshops, roadside mechanics, and family-run garages. Formal enterprises, often branded service centers, represent a smaller but growing segment, typically catering for newer vehicles and clients seeking higher standard of service. Skills and training. Technical expertise is mostly acquired through informal apprenticeship rather than structured vocational education, leading to variable service quality and innovation. The services sector increasing sophistication has begun to drive demand for higher standards and technical certifications, access to infrastructure. The efficiency of motor repairs businesses depends on the access to reliable electric power, good road networks, and modern diagnostic equipment, all of which are shaped by wider services sector investment. Supply chains. Access to spare parts and technical information is strongly influenced by trade regulations, import policies, and logistics infrastructure within the services sector. Economic impact of motor repairs within the service sector. Motor repairs businesses contribute meaningfully to job creation, skills transfer, and local economic development by supporting the road transport system, which moves over 90% of Nigeria's goods and people. They help sustain the productivity of other services subsectors, such as retail and logistics. Economic merits of the motor repairs subsector. Employment generation. The motor repairs business absorbed thousands of apprentices and skilled workers, offering a pathway for youth employment in an economy where formal jobs are scarce. Entrepreneurship. The low barriers to entry in the sector enable the proliferation of micro and small enterprises, thus fostering economic inclusion and complementary service. Successful motor repairs business often evolve into broader service providers, including auto electrics, car wash, sale of spare parts, and accessory installation, further deepening the economic footprint. Challenges facing motor repairs business in Nigeria service sector. Despite its importance, the motor repair subsector faces considerable challenges arising from both the broader services environment and its own internal dynamics. Infrastructure constraints. Power supply remains low and erratic, forcing many businesses to rely on generators, which increases operational costs. Poor road conditions complicate access to clients and the movement of supplies. Inadequate workshop facilities and outdated equipment also limit the competitiveness of local businesses. Regulatory and policy constraints. The absence of formal regulation for many informal motor repairs businesses results in inconsistent service standards and customer trust issues. Where regulation exists, compliance can be expensive and complex, particularly for small businesses. Access to finance. Limited access to affordable finance restricts business expansion, investment in modern tools, and capacity building. Financial institutions often prefer lending to well-established businesses with formal documentation and collateral, leaving smaller workshops at a disadvantage. Technical skills gap. Reliance on informal training limits the sector's ability to adapt to evolving automotive technologies such as hybrid and electric vehicles. Limited availability of structured vocational programs and certification impede workers' mobility and overall sector professionalism. Supply chain and spare parts quality. Motor repairs businesses are frequently affected by counterfeit or substandard spare parts, which undermine service quality and vehicle safety. Trade policies affecting the importation of genuine spare parts can also disrupt supply chain. Digitalization and technology adoption. Nigeria's services sector is increasingly shaped by technological advances, yet motor repairs businesses remain outside the digital economy. Limited access to digital diagnostic tools, online marketing platforms, and management software restrict their ability to scale and serve a modern clientele. Opportunities for growth and transformation. Amidst the challenges, the evolving services sector offers several pathways for and enhancing the performance and prospects of motor repairs business. These include vocational training and certification. Investments in formal technical education and certification can improve service standards, foster innovation, and enhance consumer confidence. Partnerships between government, private sector, and international organizations can help deliver targeted training programs. The current government policy on technical and vocational education is expected to improve the availability of trained technicians in the subsector. Access to finance. Tailored financial products for small businesses, such as microloans and equipment leasing, can help entrepreneurs invest in modern tools, workshop upgrades, and staff development. Infrastructural upgrades. Improvements in the services sector's physical infrastructure, power roads, and logistics will have direct positive effects on motor repairs businesses, enabling greater efficiency and customer satisfaction. Regulatory reform, streamlining registration and compliance processes, and encouraging self-regulation through industry association can help raise standards while enabling smaller businesses to access broader markets. Digitalization, adoption of digital tools for diagnostics, inventory management, and customer engagement can revolutionize service delivery. E-commerce platforms for spare parts and services also offer new growth avenues. Quality assurance, collaborations with reputable suppliers and distributors, and the enforcement of standards for spare parts can help combat counterfeiting and ensure safety. Local production capacity. The volume of cars sold by dealerships in Nigeria, the demand for high quality service and repairs workshops is an indication that the capacity for parts production and for certification of technicians exists. The roles of government and stakeholders. The government of Nigeria, in collaboration with industry stakeholders, have a pivotal role to play in shaping the future of motor repairs within the service sector. The roles of the government include policy formulation. Development of clear supportive policies for motor repairs businesses can unlock the potential for job creation and economic growth. Public-private partnerships. Joint initiatives between the government, private sector, and development agencies can deliver infrastructure upgrades, promote skills training, and encourage best practice. Industry association. Strengthening associations for motor repairs businesses can provide a platform for advocacy, skills development, and regulatory self-enforcement. The services sector is a significant part of the Nigerian economy, providing employment, fostering innovation, and supporting social mobility. Motor repairs businesses, a vital subsector, is both a beneficiary and contributor to this dynamic environment. Strategic investment in education, infrastructure, finance, and digitalization, combined with regulatory reforms and industry collaboration, can help motor repairs businesses thrive within Nigeria's evolving services sector. The financial success of the subsector will sustain the nation's mobility, drive its economic productivity, and empower the aspiration of its people.
Leah, thank you very much. That was very sharp. So now let's can anyone speak to no, not anyone. We said Agozie was going to do that.
Okay, so I think this exhibit just tells us, it gives us a holistic view about the services industry and the motor service subsector. So it tells us about the key characteristics. First and foremost, it tells us how the services industry is a growing one. And the motor service subsector is also a vital area of it. So you should also tell us that the motor vehicle subsector is a growing one, and it gives us the key features of motor repairs in Nigeria, like the informal training, the um, the access to infrastructure. That's like how they rely on electricity and good road networks, but we don't really have all of that. Also told us about how informal it is, how people don't really go to school to learn about motor service repairs. It's mostly about maybe apprenticeship. You just go to a mechanic shop, stay for a while, and learn. So that's the informal training we're talking about. Then they also give us the economic merits. They give us the challenges they were facing. The Some of the advantages are job creation. Then they also say that there was a low barrier to entry, so it's really free. It doesn't take much to learn, so it's easy to learn. Then some of the challenges like access to finance. Banks don't really give startups or all these kind of businesses. They don't really lend them money. They prefer to give recognized companies money. Um, there's a technical skill gap because you don't really learn it at a formal level. There's a technical skill gap between most of the people that are doing it on the roadside and those that actually have big companies and are have actually studied it in school. Maybe all these big um, um, mechanical shops that have would I say a a national brand than all these roadside ones. Then um, they also give like some another challenge is also like the infrastructure constraints, like I already said about how there's not much light or electricity or good roads, which also hinder the growth of the motor service vehicles. Then they also give opportunities for growth and transformation. Those are just like you just counter all the disadvantages. So how we can grow is by banks giving more access to finance, by people encouraging formal training and certification, infrastructure upgrades. If we have stable lights, if we have good roads, it will greatly reduce the rates we even go to mechanics. Also regulatory reforms, how the government should, put um, regulations that guide the standards that people operate. So someone cannot just go to the roadside and say, "Oh, okay, I'm a mechanic." There should also be standards that you have to meet before you can actually operate as a mechanic. Um, then this local production capacity. Um, I don't really understand this one, but yeah. Then the roles of government and stakeholders. Um, so the government, how the government and stakeholders can help motor service is by policy formulation, public-private partnerships, and industry associations. So what they mean by public-private is, there should be joint initiatives by government and private individuals who can deliver upgrade of infrastructure. People promote training and encourage best practice. So all these renowned companies, all these renowned motor services companies can also offer internships and trainings for people to come and learn. The government can also subsidize it, maybe to reduce the money you pay to learn. Then industry associations, strengthening associations for motor repair businesses can provide platform for advocacy. Then policy formulation, there should be clear policies in place for motor repairs and 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 how you can operate, because it will now unlock job creation and economic growth. So I think this exhibit just gives us a holistic view on where the motor repair subsector is currently in Nigeria.
That's brilliant. Very, very brilliant. So that's very good. There's one you say you don't
Thank you.
understand. Can we
Yes.
can we go back to that?
This
This one.
local production,
Hello?
yes, this local production capacity.
Yeah. It's clear that The volume of cars sold by dealership in Nigeria and the demand for high quality service and repair shop is an indication that the capacity of parts production and certification for technician actually exists. So, I mean, the level of the level of cars or the volume of cars that's sold by those that are actually selling cars today already shows that there is high demand for repairs, right? And though the capacity yet for spare parts production, we don't have it yet. And though the gap exists right now, the gap for local production capacity, the thing is there because they are actually talking about opportunities. So we can actually start producing most of these parts so that we can using it for repairs. That gap exists. It's an opportunity that any entity can actually key into. And we can provide a forum where we can be certifying technician, looking at all these existing informal sector mechanics and all of that. So local production capacity, we have the capacity. Is a gap, is an opportunity that any serious organizations that want to go into that subsector can actually key into. Okay, so again, this one has already, if you look at it, right? Speaking of this industry, speaking of the Nigerian economy, they have given you the opportunities, they have given you the strength, they have given you the threats and all of that. They have even helped you arrange it in that order. So, you see, one of the models that we're going to talk about is SWOT, but you'll not find us restating all these things the examiner has already given to you, right? They need you to really understand this holistically. And yes, they have already given you the SWOT from here already. They are all there. But they will need you to use further models to assess this industry, to assess the Nigerian economy beyond just arranging all the data they have given you into, these are the challenges. No, that is not going to fly anywhere. So when we get to that and we're going to cross it. So I think this is very clear. Speaking of this industry, there are a lot of opportunities, there are a lot of gaps, and government has a lot of roles to play in terms of policy formulation, ensuring PPP, and also encouraging industry associations as well. And of course, they need to invest in education, infrastructure, make funds available. Digitizing a lot of these sectors can also help improve improve this sector. And don't forget, the sector in question is the motor repairs subsector. That's the focus, the repair subsector. Okay, now let's go to another exhibit. Let's see. Exhibit 3. Okay, now I think we are done with motor repairs. Now, who's looking at exhibit 3?
Me.
All right, so let's get to it, Brian.
Yes, ma'am. Analysis of motor vehicle sales and distribution business in Nigeria, 2022 to 2025. Introduction. The Nigerian motor vehicle sales and distribution sector is a critical portion of the economy. As one of the continent's most populous nations, Nigeria automotive industry reflect the broader economic, infrastructural, and regulatory trends that shape its commercial landscape. Since 2022, the sector has undergone substantial shifts, faced economic headwinds, evolving consumer preferences, and policy driven reforms that collectively reshape the terrain for manufacturers, importers, and distributors. Market overview 2022 to 2025. Nigeria's automotive sector is predominantly import-driven, with a vast majority of vehicles, both new and used, sourced from Asia, Europe, and North America. Despite efforts to foster local assembly, the market remains reliant on imports due to cost advantages, limited manufacturing capacity, and consumer demand for affordable vehicles. The size and growth. Since 2022, Nigeria's motor vehicle market has experienced both moderate growth and volatility. In 2022, total annual vehicle sales made up of both new and used vehicles were estimated at around 280,000 units. The market was dominated by used vehicles, constituting more than 80% of sales. The new vehicle segment, severely impacted by scarcity of foreign exchange and high import duties, accounted for 10 to 15% of total sales. By 2023, a slight uptick in economic activities and modest improvement in infrastructure spurred a minor rebound. Nonetheless, the industry faced challenges such as persistent inflation, a depreciating naira, and increasing cost of finance for consumers and businesses. By 2024 and into 2025, the market trajectory remained uncertain but demonstrated resilience, with projections estimating total annual sales going to around 320,000 units by the end of 2025, assuming gradual economic stabilization. Key segments and distribution channels. First one, used vehicles known as Tokumbo. These make up the largest segments, imported mainly from the United States of America, Europe, and Asia. Used cars are distributed through a network of dealers, independent resellers, and automats concentrated in the major cities like Lagos, Abuja, and Port Harcourt. New vehicles with international brands such as Changan, Geely, Kia, Honda, Hyundai, Mercedes-Benz, Toyota, Volkswagen. The new vehicle segment is mainly served through authorized dealerships. However, high prices and limited access to credit confine their customer base to government agencies, corporate, and a small affluent consumer class. Local assembly. Despite policy incentives, locally assembled vehicles still account for a minor fraction of total sales due to limited production capacity and high input costs. The distribution structure. Authorized dealership, typically located in urban centers. These outlets represent international automakers and provide sales, finances, after sales services, and warranties. They rely heavily on brand reputation and long term relationships with corporate clients. Independent dealers. These actors dominate the used vehicle market, importing in bulk and reselling directly to consumers or through automats. Online platform. The digitalization of commerce has seen the emergence of online marketplaces where consumers can browse, negotiate, and purchase vehicles with increased transparency and convenience. Now, the key market drivers. Population growth and urbanization. Nigeria's population exceeds 236 million, with a rapidly growing urban middle class. The need for mobility in expanding cities drives consistent demand for both personal and commercial vehicles. Infrastructural development. While public transit remains inadequate, investments in road infrastructure, especially in Lagos and Abuja, have encouraged private vehicle ownership. The improvement of expressways and urban roads has a direct impact on vehicle sales figures. Government policies and regulation. The Nigerian Automotive Industry Development Plan, that's the NAIDP, introduced incentives for local assembly and placed higher tariffs on fully built imports to stimulate domestic manufacturing. However, inconsistent enforcement and policy reversals have hindered the plan's effectiveness. Access to finance. Microfinance institutions and emerging automotive finance products are making vehicle ownership more accessible to consumers, though high interest rates and economic volatility remain barriers for many. The challenges facing the sector. We have the foreign exchange constraints. The Naira's depreciation and foreign currency shortages have significantly increased import costs, impacting both new and used vehicle prices. The exchange rate remained volatile, creating uncertainty for business reliance on imports. high import duties and tariffs. To protect domestic assemblers, the government imposed high tariff that's up to 70% on some segments on fully built imported vehicles. While this was intended to boost local production, it resulted in higher vehicle prices and increased the influx of low quality used vehicles. Weak manufacturing base. Despite policy incentives, local assembly plants face high production costs, unreliable electricity, and limited economies of scale. Imported components and inconsistent supply chains further hamper their competitiveness. Smuggling and informal markets. Due to high tariffs and complex procedures, smuggling of vehicles through neighboring countries remain rife, undermining formal businesses and depriving the government of revenue. Poor infrastructure and insecurity. Underdeveloped transport infrastructure and security challenges restrict distribution networks and increase logistical costs for distributors and dealers. Now, the trends and opportunities 2022 to 2025. Digital transformation. Online sales platform, digital financing solutions, and data driven inventory management are reshaping vehicle distribution. The COVID-19 pandemic accelerated this trend, with consumers increasingly relying on online research and virtual showrooms. Local assembly and value addition. Ongoing investments are gradually increasing the share of local assembled vehicles. Government procurement policies favoring locally produced vehicles offer a good opportunity, though significant scale up is needed to compete with imports. Electric and alternative fuel vehicles. Though still in early stages, there is growing interest in electric vehicles and hybrid technologies, particularly for commercial fleets. Pilot projects and public awareness campaigns are underway, but infrastructure such as availability of charging stations and reliable electricity pose major hurdles. After sales market and value chain expansion, the growth of the Nigerian auto sector is driving demand for spare parts, servicing, and maintenance. There are significant opportunities for businesses offering genuine parts, quality repair services, and complementary products such as insurance and fleet management solutions. Competitive landscape. The key players in the motor vehicle sales and distribution in Nigeria can be classified into indigenous and foreign based companies. The market is further segmented into dealers in new vehicles, dealers in used vehicles, and dealers in both new and used vehicles. Folak Motors is one of the indigenous businesses selling both new and used vehicles in the sector. Projections and further outlook 2025 and beyond. The Nigerian motor vehicle sales and distribution businesses is projected to see cautious growth through 2025, with annual sales potentially reaching to 320,000 units. Key drivers will include gradual economic recovery, policy reforms aimed at encouraging local manufacturing, and the continued rise of digital sales and financing platforms. However, significant risks remain. Currency volatility, inflation, and potential policy reversals could impact market stability. To unlock the sector's full potential, stakeholders are calling for one, consistent automotive policy implementation, expansion of auto financing solutions, investment in infrastructure and security, and capacity building and skills development for local assembly.
Very sharp. Very, very sharp. So, who is going to analyze this?
Okay, good morning,
Good morning, first.
everybody.
Morning.
So, what general overview of this exhibit 3 is like they are giving a detailed analysis of the market of the automotive market in Nigeria, giving detailed explanation as to the various parts of the automotive market in Nigeria. So they first told us about the market and the vehicle distribution sector. And from this, we understand that without giving a detailed explanation of this sector from 2022 to 2025, and from this, we understand that there was a slight dip in 2023. In 2022, there was a growth, but in 2023, there was a slight dip, and 2024 and 2025 showed a rebound. and an increase in this sales and distribution of vehicles during the year. So we also got to understand that in in distribution, there's distribution of used vehicles or and distribution of new vehicles, and we also have a local assembly like aspect of this sector in Nigeria. So we understand when we are talking about used vehicles, we are talking about the importation of cars, fully assembled cars, used cars from North America, Asia, and Europe. That's like especially like USA. So we also see that most of those used cars go to major independent sellers in major cities like Lagos, Abuja, and Port Harcourt, because that's where a lot of, as we see later in the question, we see that because because there is an increase in middle class urban populations, those major cities like Lagos, Abuja, and Port Harcourt will offer more demand for cars because of the increase in urban middle class to enable their movement and things like that. So we also see that used vehicles contribute to majority of the importation in Nigeria, with it having 85%, 80%, sorry, of the imports, while new vehicles contribute to just 10%. I think that was in the last exhibit that we saw that, but I'm just like bringing it to, yes. So then we also have local assembly. So this is where they assemble vehicles in Nigeria with, like, they bring the parts of the cars, but they assemble them in Nigeria. It's still a small fraction of total sales in Nigeria, but um and this is due to like limited production capacity and due to high cost of production or input cost. So the distribution sector, now we're talking about like the dealership part, and we have like, they are also divided into various aspects. We have authorized dealership. These are the ones that are like, we have maybe Mercedes dealership, Toyota dealership, and things like that. This was the ones they were referring to when they were saying that they are the ones that do a lot of the new cars, like the importation of the new cars. So that's they bring new, like, how will I put it? Forgive better lack of better terms, but like they bring tear rubber to Nigeria. So these are the dealerships that the authorized dealerships that majorly focus on that aspect. So they provide sales and after sales services as well, and warranties. Then we also have independent dealers. These are the ones that do a lot of importing in bulk and reselling them to directly to consumers. So you they are not they are not like it's like a personal business for them or something like that, where they just import from outside and they sell. These the ones could focus majorly on. These are the ones that will focus majorly on maybe used cars, as it would have less costs to import those cars since they are used. And yes, so these are the ones that are involved in the importation of, they are involved in the used cars market majorly. Then we have online platforms as well, where you don't have to go to your dealers. You can just do everything from comfort of your own home, and yeah, you can just browse and negotiate to buy the car from anywhere. So um and it's good because there's like increased transparency and convenience for the customer. So another key area is the key market drivers. Here we see that, like I said earlier, the population growth and urbanization. There is an increase in urban middle class population. We see that it exceeds 200. Okay, no, we see that, yes, it's there's an increase, and therefore there will be more demand for cars for personal and commercial use. Then infrastructural development, we also see that due to investments in road infrastructure, especially in Lagos and Abuja, there has been increase in private vehicle ownership. Like I think they just built, for example, I think they just fixed a road in they just fixed Third Milan Bridge. So it gives customers it gives citizens the option, or allows them the option to, okay, maybe I should buy a car since the roads are better. So it has caused the demand for cars to also increase. Then government policies and regulation. So government have tried to um give incentives for local assembly to try and like bring the market that is in local assembly in Nigeria and reduce importation, because because it has its own economic benefits, like strengthening the naira and keeping the demand and sale of goods within Nigeria. So the government have been trying to do that, which has been helping local assemblies in Nigeria, and that's good. But there has been a downside to that, as they've raised import duties on on like fully assembled cars, and this will affect the other aspects of the market, which is um those authorized dealership and independent dealers, as independent dealers will have to pay more money on import duties, and same for authorized dealers too. So and access to finance, banks have been giving, I hope I'm not talking too long ago. I'll rush. Okay, so banks have been giving um customers more opportunities to own vehicles by high interest rates and by making vehicle ownership more accessible to customers. So challenges facing the sector, we have foreign exchange constraints, high import duties and tariff, like I mentioned, which is now causing the ownership of cars, because the low the local assembly, they are not making majority of they are still a small sector in the Nigerian market, so they are not able to um fully meet the demands of the Nigerian market. So people still have to resort to importation of cars, and now that has become more expensive. So that has become a challenge in Nigeria. Then foreign exchange constraints. The To buy a car, like to import a car, since we are still doing that, you have to pay more naira to the dollar to buy that car, which makes it more expensive. Then, like I said, the local assembly is still a very low aspect or minor market sector in this automotive market. Then there is more smuggling and informal market, where people smuggle cars via Cotonou or something like that. They bribe officials and things like that, which will affect um, government revenue in government revenue, and that's not good for the nation. Then poor infrastructure and insecurity. So this we are talking about, like um, the increase in cost of bringing the cars to Nigeria. They go through a lot of there are a lot of infrastructures that are not in place, that make it more difficult to bring the goods in Nigeria, and there's also a lot of insecurity. Somebody can order for a car or try and import a car, and you end up being stolen or destroyed for spare parts and things like that. So trends and opportunities. We see that there has been an increase in EV cars, We also see that because of the activities and policies of the government, local assembly has been on a gradual increase, which is good, which is trying to help us solve some of the challenges we are facing in the sector. We have also seen that after sales markets and value chain expansion, that is like growth in spare parts, like growth in the demand of spare parts because of the gap we saw in the last exhibit, talking about um, the gap in the demand of cars and the spare parts available to service those cars. So we've seen a growth in the service spare parts and service industry. So the landscape of this market, we see that key players in the motor vehicle sales and distribution industry can be classified into indigenous and foreign based companies. So these are like dealers. We have dealers in new cars, like we said earlier, dealers in used cars, and dealers in both used and new cars. So they give us an example of a company. I low-key feel that they might tell us that so company wants to buy 4 lakh motors, and they want us to analyze that if it's a good decision to do. Just an intuition. Then projection and future outlook 2025 and beyond. We we see that since in 2025 we saw increase in sales by 320,000 units. We expect that there is a consistent automotive policy implementation. We see that there should be an expansion in auto financing solutions, investments in infrastructure. I think this one is self-explanatory, but that's what I understand. I hope I've not been talking for too long. Sorry, but
So
that's what.
that's a very good in-depth analysis. And that's how you're supposed to have analyzed. That's what this person is meant for. To fully understand this, which you have shown today. So don't let us forget the flow of these exhibits. Um, the first speaker, that's Agoze, critically analyzed the Nigerian economy and the service sector. So yeah, they spoke about majorly the motor repairs service subsector. They told us about the features that they are majorly mechanic, no formal training and all of that. They told us about the advantages, the challenges. And don't forget that all this that Aguzie analyzed earlier on was the motor repair subsector. They told us the opportunities, a lot of information and data that they gave to you there. Now, they move into another subsector, which is the sales and distribution subsector. They spoke about it that the market is huge, they are doing so well. There was a time and they are doing almost 280,000 units 2022, and they believe it's going to grow by 2025. It will be at 320,000 units. But there was a shock, like what the way FAE has critically and brilliantly analyzed it for us this morning. He looked at every part and he explained it in detail to us. But have in mind that this is another subsector of the service sector, the automotive service sector. So I don't want to repeat because he has done a very good job. I don't want to start repeating what he has said already. So that's that sector. They told us the opportunities, the challenges, what we expect the government to do. See, these are data. They are giving you information. They are giving you data. And I like what he said. I like the fact that he mentioned that the examiner might come up and say a company wants to buy 4 lakh. And there's no problem. Yes, they could do that. They come in that direction, right? Because we can see here that the company in question that the questions will be about is FOLAC. It's FOLAC motors. And FOLAC motors from this paragraph here, below this competitive landscape, they say FOLAC motors, he operates in the business of selling both new and used cars. So, which goes to show that this company FOLAC is not operating in the motor repairs in that sector. Okay, so for me, the direction I would look at would not be a company coming to buy FOLAC, because if a company is coming to buy FOLAC, because in the exam, in the unseen, you are going to be advising FOLAC, right? So are you going to advise FOLAC whether I should sell or not? No, the examiner will not have latitude to ask many questions. It's FOLAC that would probably be acquiring another company, whether in existing repairs, in other subsectors, that they want you to then analyze that potential acquisition, or whether SOLAC should itself move into that business like that. That's what you're going to find in your exam, basically. Okay, but good job, good job, good job, good job. Now, let's move on to Exhibit 4. Or is somebody
Okay.
trying to ask a question?
Possible.
Joy, are you ready?
Yes.
Hello, Stephen.
Analysis of motor
No,
repairs,
I
service
wanted to ask a
centers.
question.
Okay.
Okay, all right.
Okay,
Anthony, go
good
ahead,
sir.
please.
Yeah, good morning, everybody. So I'm pouring the class as well, but I have a little challenge here. Now, after the passage, the analysis that was given in Exhibit 2 and Exhibit 3, that I also have the idea as well. But my question is this now: how do we coin this into the actual case writing itself? Because there's something you said that we have to have an in-depth understanding and not just uplifting what we see in the exhibits to the reports. For example, now if they say if you use SWOT or if they say if you use PESTEL, how do we apply that to it? How do we merge it together? Because now, I don't know, just like my other colleague was analyzing it perfectly. Is that what we're supposed to be putting down? Or I'm being direct here now. For instance, you say use SWOT. How do we not relate that with these exhibits? That's my question. I don't know if I'm even making any point, but like the writing itself, how do we convert these various exhibits into maybe like SWOT analysis, maybe like PESTEL, and how do we go about that? That's my concern.
All right, so if you have followed the few classes we have done, that still being a concern here is actually worrying me, because it's worrisome for me. We have done like one of those case study, and I think we have analyzed the reports. I've shared these notes with you and all of that. But just ensure you follow through today from the beginning to the end in the next 1.5 hours when we finish this. Then you will see how we're going to eventually do that. Everything is contained here, and we are going to look at it today. So what we are doing now is trying to understand the information, the data, identifying the data given to us. So when we identify the data given to us, then we're now going to move into what we expect, because you need to understand what they have actually given to you. Then we'll move into the expected unseen. Then on that basis, we'll then use the data. We'll then use the data to advise based on the requirement of the unseen. So you will see how we're going to put everything together. Just ensure you follow through as we move on.
Thank you, sir.
Yeah, so let's go
Sorry,
to
I have a question.
Okay, please quickly ask it.
Not a question per se, though. So from Exhibit 3 that has just been read, so it's looking more like we use a PESTEL model. I don't know, correct me if I'm wrong, my understanding there.
Okay. So why are you looking at PESTEL?
So because it highlights some key areas that relates to political economics, at least the one that talks about inflation rates, exchange rate and all that. Then logo part as well as at least the one that talks about the incentive being given to local manufacturer, and also the one that talks about the middle class that spawned the increase for purchase of the vehicle. That one talks about the ecological part. So I think for me, it relates to pest. That's my understanding there.
Okay, so the reality is this, you can analyze any of these data using any of those models, right?
Okay.
And again, I need to tell you something very clearly. This analysis that you're going to do in the exam is really structured into three. It's structured into three.
Okay.
Number one is
Mm.
financial statement analysis.
Okay.
And that financial statement analysis is where they will give you financial statement of companies, which you are going to analyze using ratio and trend. Number two is financial data analysis, which is used for operational analysis. So financial data analysis is where they will give you data, and you now use most of this information you have. They'll give you financial data where they will give you things like breakdown of the costs into variable costs, fixed
Okay.
cost, or all these numbers they are giving you around how well the used cars is doing, the proportion of local assembly in the market. So you use financial data to either contribution margin analysis, or to use either you want to do, they'll give you, maybe you want to analyze a budget, or probably maybe you want to use MPV, depending on the information given to you. And the third one is where the models comes in, is strategic analysis. So the model would be applicable where they give you information around the strategic direction of the company, where the company wants to be, or where they are going. So that is when those models can also actually come in. So with all this data you have, you can, it's not just about saying, okay, it's Pestel, okay, it's SWOT, okay, it's Potter's 5 Force, or okay, it's Ansoff. It depends ultimately on the requirements that will come, which will be segmented into financial statements, financial data, and the strategic direction of this company, what this company plans to do, which are going to use those models. So what the models do is basically to advise on the strategic objective of the company, that this is the direction you should go, by looking at either, like you have mentioned, Pestel now. If I look at the political landscape, economic landscape, social landscape, then I can then advise that, okay, looking at this is where you should go. Or I use Ansoff, that, okay, this company, you want to go into this segment, right? Right. If you are looking at product development, this is the impact of that. These are the strategic implication of that. So, which is what I want to try to do for you in this. I would just follow through, put it all together. I like the way you're thinking ahead, but ultimately, I would try and look at all of these three major areas, these three key areas I've mentioned. So today we will look at one aspect. Next week again, we will look at another set of models for strategic direction, while for the operational and financial, those ones will look at different sets of ratios, different set of financial data analysis tools to address all of that. So let's just continue. Then while we're going
All
to
right.
be addressing those concerns as we move on, but have those in mind and understand the structure of what we're trying to achieve eventually.
Thank you.
Okay, so let's get to Exhibit 4. Joy, let's get to it.
Analysis of motor repairs, service centers, and spare parts sales in Nigeria. Introduction. Nigeria has a rapidly expanding automotive sector. The growing demand for personal and commercial transportation has led to the proliferation of motor repairs, service centers, and spare parts sales retailers across the nation. Overview of the automotive after-sale market in Nigeria. The automotive after-sale market in Nigeria encompasses a wide array of services, including vehicle repairs, routine maintenance, and the sale of spare parts. The sector is largely driven by the aging vehicle population, importation of used vehicles, and challenging road and environmental conditions that accelerate vehicle wear and tear. Most vehicles in Nigeria are imported, with a significant portion being used cars, further intensifying the demand for maintenance and replacement parts. Motor repairs. Motor repair workshops range from informal roadside mechanics to formalized, branded service centers. Informal operators dominate the market, offering cost-effective solutions but often lacking advanced diagnostic tools and standardized practice. Formal workshops, typically affiliated with car manufacturers or franchises, are concentrated in major urban centers. These centers provide higher quality service, access to genuine parts, and better trained personnel, but their services are often more expensive. Service centers. Service centers in Nigeria are evolving, with more dealerships and manufacturers establishing authorized service facilities. These centers offer comprehensive maintenance packages, warranty services, and customer support. However, their reach is limited, and many vehicle owners still rely on independent workshops for routine maintenance due to cost and accessibility. There is a growing trend towards digitization, with some services adopting online booking, customer relationship management, and telematics to enhance service delivery. Spare parts sales. The spare parts market in Nigeria is extensive and fragmented. It includes both genuine original equipment manufacturer, that's OEM parts, and after sales markets, that's non-OEM alternatives. The prevalence of counterfeit and substandard parts is a persistent challenge, often resulting in compromised safety and vehicle performance. Major spare parts markets serve as hubs for distribution. The rise of e-commerce platforms is gradually transforming the sector, making it easier for customers to access a wider range of products, compare prices, and verify authenticity. Then the key challenges. The major challenges in the subsector include counterfeit parts. The influx of fake and substandard parts undermines consumer trust and vehicle safety. Skills gap. Many mechanics lack formal training, leading to inconsistent service quality. Infrastructure. Poor road conditions and inadequate workshop facilities hamper efficient service delivery. Then we have import dependency. Heavy reliance on imported vehicles and parts exposes the sector to currency fluctuation and supply chain disruptions. Regulatory oversight. Weak enforcement of standards and regulation exacerbates the proliferation of counterfeit goods and unqualified service providers. Opportunities. The subsector presents the following opportunities: training and certification. Investment in skills development and certification programs can improve service quality and industry reputation. Digital platforms, e-commerce and digital service management tools offer new avenues for growth and customer engagement. Localization, encouraging local manufacturing and assembling of spare parts can reduce import dependency and create jobs. Partnerships, collaborations between manufacturers, service centers, and training institutes can drive industry standards and innovation. Future outlook. The motor repairs, service center, and spare parts sales sector in Nigeria is poised for growth, driven by increased vehicle ownership and urbanization. However, realizing the sector's full potential requires addressing the challenges of counterfeit parts, skills infrastructure gaps, and regulatory enforcement. The integration of technology and investment in quality assurance will be critical in shaping a sustainable and competitive automotive after-sale market in Nigeria. New entrants into the motor repairs, service center, and spare parts sales could potentially be companies that buy and sell new and used vehicles, such as Folak Motors.
So thank you very much, Joy. So if you look at this last paragraph, this last paragraph, they said new entrants into motor repairs, service centers, and spare parts sales could potentially be companies that buy and sell new and used vehicles, such as Folak. So you see, this has already given us the clue of how the unseen is going to look like. You see that everything we have read so far, they mention very few things about Folak. They need you to read this and read it over and over again. They mention very few things about Folak until the last paragraph, which they believe a lot of you would just jump and not focus on. But this is where the question is going to come from. They said new entrants into motor repairs, service centers, and spare parts sales could potentially be companies that buy and sell new and used. So what you're going to find in the unseen, they will tell you that Folak wants to enter into, because what Folak does, they told us earlier that what Folak does is that they sell new and used vehicles, right? They will tell you that they want to enter into motor repairs. They want to enter into either of these three. They will give you information. They will give you data around motor repairs, service, and they have given us a lot of them up there. That was why they gave us information around these motor repairs. They gave us information around service centers and also spare parts in Nigeria. So they will tell you in the unseen that you are going to be advising this guy whether he should enter into this new market. And the best model for that is Ansoff. Beyond your just when you're saying we want to look at pestle, you cannot be restating what they mentioned in the question. You need to apply judgment. You want to use SWOT. No, don't expect that. But I will also show you where those ones we apply. But for today, it's more focused on the best likelihood that the exam is going to ask you. Anytime a company wants to grow, anytime a company wants to enter into a new market, it's hands-off. And that's what this is going to look like in the exam, based on this last paragraph here. Based on this last paragraph here. And all this information they gave us, that was why they further this last paragraph as before. It's like they restated motor repairs for you again, service centers and spare parts. We have actually read this in other exhibits. They restated motor repairs that is majorly informal sector. right? So the ones that are formalized are just those that have affiliation with those car manufacturers, and those ones are more formal. So probably maybe you'll be advising him to go into the formalized one. Probably you should train roadside mechanics to right. So like that. The service centers, right? They would also give you information around, okay, aside motor repairs, they give us information around service centers in Nigeria. So in the exam, they will give you data around motor repairs, service centers, spare parts sales, and you're going to be advising where you should be. That is what the exam is going to be. And up there, they have given you several information. They started with the Nigerian. In fact, they gave us what the government needs to do, the opportunities in those sectors, and all of that. So what you need to do with all this data is understand it. Understand, not that you start using pestet to be saying, no, that's not what you are going to do. Or you want to use SWOT and be, no, that's not it. They understand this report and use it. And use it in whatever model you're talking about. Use it in your analysis of your financial statement. Use it in your analysis of your financial data. Like the key data that they are giving you, like this sales and distribution, which is where this guy currently operates. There is nothing wrong with this where he is today. The market is fine and is poised for growth. Look at the compounded annual growth rate, the CAGR, is coming from 280,000 units. In 2025, it will go to 320,000 units. And it's used cars. That's where the money is. Used cars. Those that are in that market. I don't know if anybody here sells car. That would help you in this case study. You would apply judgment, use all this data they have given you, understand it. That, okay, this is the used car market. They have told me that in this sales and distribution, there is the used car market, there's the new car market, there's the local assembly. And this guy right now is not operating in the local assembly because it's even very minimal. It's very minimal because of the infrastructure and the rest. And what Folak does right now is that he is operating in the used and new car. Though they are facing some challenges now because government is trying to encourage local assembly. They might also come around that he might consider that, but you advise him to slow down on local assembly because of the investment requirement and all that. However, see the market here, all this data they gave me here goes to show that the sales and distribution of car market is fine. But government policy is trying to stimulate domestic manufacturing. That's the direction of government policy from A to Z in this precinct. So anytime you are talking about government policy, you should always tell him that they are they are encouraging, they are trying to move towards domestic manufacture. And you might encourage him to do that. So if you look at the previous SCB that talks about the repairs market also is a huge gap. They didn't give us any information yet, but in the exam, they will give you data around probably a company that is in that market if they are going to go the route of you buying another company. But if they are going to go through the route of you moving into that market, probably you will do projected cash flow. They will give you some investments, information, and all of that. Now, we have read this person, and I believe that is to a large extent very clear in terms of the sequencing of those exhibits. The examiner started from the Nigerian economy, that our economy is majorly driven by service sector. 50% of our market is service. Then they now went into motor repairs sector. And all this information given to us, the key thing is that this motor repair sector is dominated by informal people. There are just very few formal. And the formal ones, they are very expensive. They are very expensive. So that gives me the idea that the FOLAC, if he wants to go into this market, he should focus more on being formal while not being too expensive. Another thing is that if he wants to go into repairs and service subsector, access to spare parts is influenced by government policies, logistics, and all of that. So foreign exchange restrictions and all. They give you all that data that you're going to use to advise. They are not giving you this data to use to now categorize into this. No. That is not what this data are meant for. Understand it and advise. Again, in this repairs and services sector, right? If you are there, you can even help in creating employment because there are a lot of informal people. So technicians are plenty that you can actually employ. And this is an area that is waiting for the barrier to entry is very small, though that's a challenge to FOLAC itself. But if he operates in the formal part of it, he can distinguish himself and make people wants to come to him. So all I'm doing is trying to understand this precinct. So today I'm going to focus more on the more likely one that I see the exam asking, judging from this last paragraph here. It's this last paragraph, anybody that reads it should know where the question is going to come from. That new entrants into motor repair, service, and spare parts could potentially be companies that buy and sell new and used vehicles, such as FOLAC. That is what the exam is going to be. They will tell you that they want to go into that market, and you're going to advise them. Given all of this information, given what the government wants to do, so let's focus on that. And they give you financial statement of FOLAC. The reality is that you are going to do little with this in the exam. You are going to do little with it, right? In the sense that it's not FOLAC statement you'll be analyzing, it's other company statement. Except where you just want to advise that this company currently is doing well. As you can see, if I want to do a trend analysis, I can see its profit, its revenue up, its net income up, its interest expense down. So that means this company is not really geared, right? So he's doing well in terms of profitability. And if you look at his assets, his cash position, okay, is down. His cash position is down, receivables is up, inventory down. Well, his liquidity position is not looking so attractive. Let's look at his debt profile. Payables, let's look at non-current. Long term, slightly up. Is up. Okay. So by the time we do few comparison with debt equity, we can probably speak one or two around his existing position right now, and probably maybe make like a forecast of where this company is going, because that will help us to advise whether he should even focus on his own subsector, sales and distribution. That whether he should not buy or not, that would form part of our advice. Okay, let me have some comments before I move into further aspects. I saw your hand. I saw somebody's hand up. The face shit on.
Sir, sorry, it was a mistake. Sorry.
Oh, okay. All right. So again, the first thing I did for you right? Again, is I summarized this present
Hello, sir.
because the essence of the present is for you to have a comprehensive understanding of that industry. Believe me, you are not going, it's not the present that would tell you whether you are using SWOT. And the strategic model is only, you need to understand that is for strategic outlook, strategic direct. That's where the models comes in. And it's just like maybe 15% of whatever mark you're going to get in your exam. So it's just a segment of it. So that's not the focus of why we are reading this. No, I won't start saying, you use, no. Right? That will ultimately depend on the unseen. And the last paragraph of Exhibit 4 has told us where the strategic direction of the company would be. And I tell you, Ansoff it would fit in. Because any company that wants to grow, you would use Ansoff to analyze their growth strategies. They didn't tell us their growth strategy yet. They didn't tell us, but they are going to tell you in the unseen. Whether they want to go into motor repairs, whether it's the spare part market they want to go to, whether it's they will give you some financial data around that, which I've tried to do for you here. Now, Anthony, I hope you are following so that you'll be asking the same question again next week, and I'm doing another one. Now,
Yeah.
again, the unseen, I've summarized it, not so that you want to restate it in your report. It's just so that you understand that industry very well in a very summarized way. And from the analysis Aguzi have done, Feishito has done, we can see that first, they speak very little around this company. But we can tell from the little they mentioned that is into sales and distribution of new and used cars in the Nigeria's automotive sector. See, where he operates, we saw that, yes, it's challenging, but the market is evolving, right? Yes, there is currency volatility. Yes, there is infrastructure gap. Yes, there is regulatory uncertainty. But the precinct has actually appointed you as Shukudi, that you are going to analyze the performance and you are going to advise on their strategic direction. That's the essence of the precinct. We don't know their strategic direction yet. It's only that last paragraph that gave us an hint into it. So the way I'm going to help you, I'm going to do a sequencing. I will start from analyzing Folak's performance because that will help me to advise him on how we move strategically into other subsector, right? So ultimately, that's how you're going to move in the exam. Now, Exhibit 1 talks about what you're going to do, Sylvester. You're going to analyze financial statements, evaluate business and strategic proposal, judgments, and all that.
Hello, sir.
Yes, Dapo.
So can I ask a question?
Yes, please.
Okay, so it's about Fulak Motors. In the I'm like in the analysis of Chukudi, so they stated that we should understand the tax impacts because they made mention of something about taxation and stuff. And in this precinct, they didn't give us any further information about tax. So would you also like give us things to expect about taxation in the unseen? Or do you
No,
think they will not come up with any tax issues?
I don't see them coming up with any tax issues here. I don't see them coming up with any tax issues. It's always like this. They always put all this. This is a generic requirement. And this percent, I can't see any. So I'm not going to. I can't really figure
Because,
out.
sir, in
So
the unaudited, I saw something about, I don't really understand what it means. Benefit from / provision for income taxes.
Yes,
So
it
like in one
is
year
tax under
they charge
liability.
him to tax, in the other year they didn't charge him to tax. I don't know because it's new to me.
Hold on, hold on. Let me just go there so that we can look at it again. Okay, I can see on if you are going to see taxes, it should be under
Income statement.
yeah, if you can see it under income statements, and this company is making, they are giving him some refunds in 2024.
Okay,
Probably
it's
it's
refund.
making refunds there, making
Okay.
refunds, right? So, and which is why under his liability is not paying any tax. There's no
Okay.
tax under liability, and though there is deferred tax here. So there will be very, very little to nothing on taxation. Yeah.
Okay.
Yeah. Okay. I think I have another hands up. Ufoma,
Good morning, sir.
good morning.
I was going through their income statement. It's as if that statement is even cooked. Like these other losses. When you do the calculation, it's not balanced. I don't know whether they just it's like they manipulate their operating income somehow for 2024.
Oh, okay. So when you did 52 minus 11 minus 31, this income before income and tax is not giving you 72, Abi?
Yes.
Yeah, so I would not want to uh I would not want to overemphasize on that. It could be
It's unaudited, so there is likelihood that error will occur. Don't you
yeah.
think so?
So yeah, and somebody said they even added it. No, they didn't add it now. This is operating income, this is interest expense, and all of that. I don't want to go through the direction of no. That will not be very um to go through the route of they did not prepare their accounts well, that they make arithmetic error and all of that. No, that's too basic to start using that as analysis. No, so I would majorly just work with the numbers, and I can see that even in 2023, this 39,670, they added it with this 3,620, which shows that that wasn't a tax, that was more of a benefit. So that was more of a benefit, like a tax credit. And this year, where they made a profit, they deducted. So that would have been maybe the way ICAN has actually presented those numbers for us. So if you want to cook figures, you won't cook figures with arithmetic accuracy. You cook figures by looking for accounting loopholes and all that. So I will not do my analysis from that direction. Okay, so and Alia is asking that the motor repairs and service centers, are they two different things? Because it seems they are one when both are services. Well, it depends. Of course, there are two different subsector, and they could be one. We could treat it as different, we could treat it as one. So from the pre, those that are in the formal parts, those ones, they put together the two together. They do repairs and sales of spare parts, and also the service, depending on the services offered. We could put it together, we could separate it depending on the numbers they give us eventually. But here in my unseen, I put them together. I'm seeing them as one subsector for us here. Okay, Okwelowa.
Good morning, everybody. Good morning, sir. For what my sister was trying to point out, that with the cook error. No, from my own analysis here, I tried to do my arithmetical accuracy, but I now realized that the figure that is under the under laws, from their own perspective there, it is positive, not negative. When you add 31.290 plus 52,190 and take away 11,150, you have 72,330. I'm just thinking maybe it is just an error there. It's not supposed to be in bracket from their own calculation. Thank you.
Oh, thank you very much. Thank you very much. Okay, so we'll see how we can actually talk around that. If it's other laws, then other laws will be deducted, not added. So that will not be a key component of this company. That it's not really, because this is the company we want to advise. We want to advise them. We want to analyze their statements. We can point out the arithmetic mistake, right? We can point that out, but that will not be the major component of our discussions majorly. So let's make progress, right? But good that you pointed that out. So
But
again,
can
yes,
that also be like an ethical issue to talk about?
and that's a very good one,
I think so.
Dapo. Yes, it is. It is. It could be an ethical issue to talk about for the company themselves that they made a mistake. Yes, I mean, there is nothing wrong pointing that out. Seriously, there is nothing wrong that in the precinct you see this, but yeah, you can point it out, but ultimately they will give you the audited reports. They might give you the audited report of this company, and they might not. They might give you a report of other companies or financial data of. So that's ultimately what we're going to work with eventually. But I think this is worthy of noting because it might be, is mostly a mistake, majorly from them. Okay, so we'll get there. Now, we talked about the Nigerian economy. We already mentioned that this economy is um, okay. Just sorry, I think somebody is asking a question also. Yes, of course, you can jot down in your answer booklets. Don't jot down in the question booklets. Okay, as soon as you get to the exam hall, you can, which is the first thing I told you to do in the exam, you need to summarize the unseen first to identify the key requirements and your understanding of the strategic direction of the company, what they want to do. You need to break it down. That's the first thing you have to do before you start writing. You're supposed to read and plan your answer very well first. That's the first thing you should do in the exams. So yes, you can. Okay, so the Nigerian economy and the service sector, they already told us that is big, 50%. The service sector majorly. They told us the key characteristics and challenges dominated by informal sector, skill gap. Majorly, they use apprentice. We don't have infrastructure. There is limited access to modern equipment, counterfeit spare parts, limited digitalization. So the opportunity is for you to formalize this informal sector. You can start training apprentices through certification. If there is improved access to finance, vocational, and all of that. Regulatory reforms also can also improve this industry as well. And also, government policy and industry association are expected to promote standards, local content, and sustainable practices. These are majorly what the opportunities they told us that we read and we discussed at length there. Also, they talked about the sales and distribution sector, which is 80% of it is Tokumbo used, while the 10 to 15% is for new cars. And the trend in the market is right now we're doing 280 units, and majorly is imports driven. So the new segment relies heavily on authorized distributors, and the local assembly is very minimal, even with the incentive government is provided, but people are still gearing towards importing these used cars majorly. That's what people wants to buy. They are not buying the local, the one that are assembled locally. Now, what is going to move us to growth? All these are stated in the question. I just jotted the key points. Population, infrastructure, finance policies for local assembly can drive growth in this sector, in this automotive industry. And we also noted some challenges in that industry as well: foreign exchange, high import duties, infrastructure, and all that we also noted. Okay. Okay, Usman, you can go ahead with your question, please.
Good morning, sir. Good morning,
Morning.
class. Good morning, all. Yes. Sir, these key points you are summarizing now, do we list them on the appendix page, or we should just summarize them orally? That's my question, sir.
So it's not part of your report. It's just for me to
Yeah. Yes, I'm saying, can we, when we note these key points you are summarizing, can we just note them on this page before we start writing our appendix?
Yes,
before we
yes.
start labeling our appendix.
Yes, of course.
Okay.
Yes, of course. So the examiner gives you 1 hour for that, for planning and reading. They allotted 1 hour. So everybody expect you're supposed to jot key points down. Don't put it in your mind, please. Jot it down. So each exhibit, know what it's talking about. Note it. So the pre-seen will not be a problem for you because I've already summarized it for you. The unseen, note it. You will note the data they are giving you about the company newly, their strategic direction, and they might give you more information about the internal structure, of FOLAC. They will tell you more information. So you are supposed to know exactly what all those are talking about. So again, like we have analyzed already, we have already analyzed these motor repairs, service centers, and spare parts. So the motor repairs, those are roadside mechanic to formal service centers, right? So the service center are more of the formalized, they too, they do repairs, right? But they also then do quality service, but it's expensive, right? And there are some that sell spare parts, okay? And it's fragmented. There is a lot of fake, and digital platforms are emerging. People can buy it online, and we source opportunities in those areas as well, from skill development and certification, e-commerce for spare parts, local manufacturing, and that. So I also noted some points based on the information given on FOLAC, their revenue year on year, the operating income, the net profit, and the net profit margin of this company. So I focused on the major movements that the revenue is growing, though the cost is improving, is increasing. it's also going up. So net profit improved largely due to reduced interest expense and favorable tax effects. As you can see, they were giving them some tax benefits from the correction. Then I also summarize their financial position, their total assets going up, current assets a little stable, their long-term debt is increasing, equity is increasing as well gradually. So gearing the debts, if I compare debt to equity, is they're highly leveraged. And I noticed key ratios, like 5 ratios that I know I would need for this company. Then now the strategic outlook is this company might want to expand beyond sales into repair service and spare parts, aligning with industry trends. They will leverage digitalization and for marketing and customer engagements. Then they will try to manage exchange risk and finance costs. So they would also strengthen their internal governance and ethical standards as a growing indigenous firm, and they would also explore partnership or franchise to gain technical expertise in those areas, because they would majorly operate as a formal, if they want to go into this industry, into this subsector, is it will go into the formal part where they would operate repairs, then they will have service centers, but they will make it a little cheaper than the ones in the existing market. So the ratios you are going to compute in the exam majorly might not be based on FOLAX, it might be based on the information, because they will give you new information. Okay, so you are not going to compute ratio based on this present, right? They will give you based on you are going to compute your ratio based on the unseen. And please, let me repeat again. The examiner will give you audited account of FOLAC in the exam. Your ratios will be computed based on that, not based on this present, right? So this is just me just doing a high-level summary of what I can see in the present, like that. And don't forget, financial statement analysis in the exam takes like almost 20%. So it's very, very important, a very important part of your exam. So ultimately, what the precinct paints is that this Fulak Motors is growing and is at a strategic um, crossroad between either it should continue to import its vehicles, or it should evolve into technology-enabled after-sales service economy, where it will enter into repairs and the service sector. That's what the question is going to look like. So this company, its performance is stable, right? But can it sustain it? Now that then depend on, is it ready to diversify? Because it has started making some losses, as we can see. Also, his operational efficiency. He needs to improve his cost. He needs to reduce costs and increase volume, do a lot of marketing. Also, he must be ready to integrate digitalization, because those are areas of opportunities from what we have read in the precinct, and also risk management. So you see, what this precinct has done for us is that he has now set the stage for you. He's going to assess your ability to evaluate investment visibility, right? The unseen will test your understanding of governance ethics. It's going to also assess your understanding of strategic decision making in a dynamic Nigerian automotive context. I mean, you need to confidently advise this company how it should move. The examiner will tell you the strategic direction in the exam. They will tell you where they want to go. And everybody agree that what they will tell you is that they want to enter into that market, into the technologically driven service sector or the motor repairs. And everybody agree here today that this guy should move into the formal part so that he can incorporate all these roadside mechanics, he can train them, certify them, then use that to offer cheap formal services to cars. And there are a whole lot of it, considering the fact that our population is 137 million and the urban middle upper class um, it's increasing. So it's a huge opportunity for the guy at the end of the day. But so let's progress. This I told you that we were going to be looking at two set of unseen, proposed unseen. This is the first one, which is the most likely one. Then we're going to look at another one that looks at it from another angle. So reason I'm doing that is um just so that I can cover as many options as possible. Even though I'm sure that for the model part is majorly going to be unsolved, but I also want to touch on some other models like Porters that's also very similar to unsolved that can also analyze industry, that can analyze new entrants and all that. We also would use that as well. But you don't expect to start using, you are going to use one model ultimately in your exam. So you choose the one you're comfortable with. So now this is unseen, right? So I have exhibit 4. I have we end the pricing at exhibit 5. So this is exhibit 6. So they will tell you that there was a board briefing, a proposed business diversification. During your exam, the first exhibit is that your boss in the office is going to write you a memo. And they will tell you do this, do this, do this, do this, do this, do this. That's where they would have the requirement in the exam. That's where they will give you all the requirement what you're supposed to do. But I just want to simplify this a little bit, just to go straight to the point. Now, they will tell you about the proposed business diversification of this company. That the recent board strategy retreat, the MD of Folak Motors, Mr. Fola, presented a plan to diversify into matters, motor repairs and after-sales service under a new subsidiary, Folak Auto Care. So what the subsidiary will do, it will operate full service diagnostic and repairs, include spare parts, and it will partner with South African automotive equipment supplier for diagnostic tools and training support. They will give you what they need, the initial investment estimates in millions. So it is like a budget. They will need to buy land, equipment, spare part inventory, working capital, pre-operation, pre-opening expenses, and total investment is going to this. It might give you the project useful life, depreciation, the tax rate, and they give us the cost of capital at 16%. It might give you forecasted cash flows. So this is just an estimate, future cash flows. So they will give you those information, but you see, they will make it long and all of that. I'm just going straight to the point. They will say a lot of things there that they will give you in the exam, but you should be able to identify the key things there, right? In terms of what do they want to do? Did they want to buy? They want to diversify, right? What would that company be doing? and the figures, the financial data they will have given you. Those are important. So I just gave you the data and the cash flow information that they gave us. So they did a projected cash flow of 7 years for us. Now, another exhibit actually talks about performance issues and ethical concerns. So they said the audit team discovered discrepancies between imported vehicle inventory values and sales documentation. So a review of customs record revealed that some imported vehicles were under-declared to reduce import duties. So additionally, the finance manager who authorized the transaction is the MD's cousin. The board minute shows no documented policy on related party transactions. Several vendors supplying spare parts have not been verified under the company's procurement process. So the audit committee has requested the external accountant to evaluate the ethical and governance implications and recommend control improvements to prevent reoccurring. So you know that they will tell you information about the company itself. They will tell you their strategic direction. They will tell you more details about that company. So that is where you're going to talk about governance and ethics. That's 10% in your exam. 10%. So it's not something you want to joke with. So with this, I'm able to see areas that I'll talk about when it comes to ethics, areas I'll talk about when it comes to their governance system within the organization, how they authorize transactions and all that. That exhibit will help me. So here I just focused on the main point. So when they give you the complete story, you need to be able to itemize the key items in that exhibit. Now, okay, this. And that's the first thing you have to do, right? So that you will know which exhibit applies to where. And don't forget, what you are doing in the exam, I would keep repeating it, right? It's three things: financial statement analysis, financial data analysis, strategic analysis. All your requirements will fall into one of those three, right? So, like all these ones that they have given me, all these are just for financial data analysis. I'll use whatever data analytical tool to analyze this data. This will help me for ethics, really. It's still under, this is more of operational analysis. Okay, I'm coming. So, yeah. So this will help me for operational analysis, especially ethics. Yeah, aside from all these analysis, ethical is also very important. Ethics and governance, because it's 10%. You need to create a section for that in your report and speak to it based on what the exhibit will have given to you. Okay, somebody's asking a question, Aliyah. She said, yeah. So, yeah, so here they are not buying a new company, they are creating a company from scratch, right? So they are using a new company to move into that market. They are not buying a new company from here. So Exhibit 8, that's where they would give you the actual audited accounts of this company. Like I told you, is based on this that they would then give you that you are going to compute your ratios. It's based on these exhibits that you're going to do your financial statement analysis. And here we did some forecast that, okay, if they eventually buy what they want to buy, this is where they would be at the end of the day. And the examiner would further give you information around their strategic consideration and strategic direction. So they give us the industry trends that the online spare parts market through e-commerce platform is growing. The government is launching a vehicle refurbishment and emission control policy, requiring registered workshops to meet safety and environmental standards. Banks introducing auto repair franchise, financing at single digits. New entrants offering mobile diagnostic service at lower cost. So this one I've summarized for you, it could be they would in the exam they will give you in like maybe 6 paragraphs. They will give you 6 paragraphs. So you just jot down the key things here. So now I know where the market is going. So I know what the industry is moving towards. I've summarized it here that online, everybody's going digital. The government is bringing in more control and they are requiring all workshops to register. And also banks also now are now giving loans. Okay. The banks are now giving loans and a lot of people are now entering into the market. So this is what is happening in the industry. And this would also help me so I will need this information when I'm advising the company on their strategic direction using whatever model I choose to use, right? And they can tell you which model to use in the exam. When the company is either you're going to be looking at answer for portals majorly. In this, based on the preset, those are the two, and we can look at more also. But majorly, what fits into this into this context is more of hands-off than any other thing. When a company wants to grow, when they want to move into a new market, when they want to have a new product, is hands-off. Now you're going to use to do the analysis. So this is what is happening in the industry. This is where the automotive industry is moving towards. There is now stiffer regulation. People are entering into this service sector that want to enter, and now they are not that expensive anymore. They are offering it at a lower cost. So all these I've extracted. Though I've summarized it for you, again in the exam, it will be long. They'll write a lot of stories, but be able to identify the key trends, which of course they would tell you in the unseen that you're going to use to advise this company at the end of the day on what they should do and how they should move. Now, eventually, they will tell us their proposals. They will tell us their proposals. So their proposal is this, They want to approve investment in Folak Auto Care to diversify income and reduce dependency on vehicle imports. They want to obtain financing of 800 million through a 6-year term loan at 15%. They want to introduce a digital service booking and customer feedback system integrated with sales database. They want to establish an independent procurement verification unit following recent audit findings. So this is what the company wants to do, which we are going to advise them whether or not to do it using the financial data they must have given to us. Now, the unseen will also tell you what you're supposed to do. This will be the first, it's usually the first and the last. So they said, you as Sylvester, training accountant at this Bagudu, now you're required to prepare a comprehensive report to your partner, summarizing your findings and recommendations on the financial and strategic viability of fuller auto care investments using MPV and IRR, or it could be any other tool. They said the ethical and governance concern arising from import declaration and related party issues. The overall financial position of Folak Motors, referencing trend and risk factors, appropriate recommendation to strengthen governance, sustainability, and future competitiveness. So, how do we go about this? In the exam, the first thing, the first place that is practical for you to start from is not for you to just start writing. No, for you to start with your appendix first. And the way I will move from my appendix based on this unseen is I'll start with investment appraisal using MPV and IRR. I will do ratio analysis, right? Then the ethical and governance review. Then I would analyze the strategic positioning of, but practically, what I've done for you, what I would advise for you to do is you might not put this in your appendix, this ethical and governance. You can just go and write whatever you want to write in your analysis of findings. I think it will be easier for you. I looked at it again. I think it will be easier for you in the exam to just do your calculations in your appendix. It will be easier for you in the exam like that. Then go and do your analysis of models. Do it in your analysis instead of writing. I don't want you to start wasting a lot of time. I'm just looking at, when I looked at the structure of the mark and all of that, I see that whatever analysis you do in that analysis and findings, not putting the key part of that model in your appendix will not affect anything. So I will just intentionally omit those two. Now, first, appendix 1, investment appraisal. So in the exam, you're supposed to start this on a new page. Appendix 1, investment appraisal of the Folak Auto Care project. Now, they give us some data in the question: initial investments, budget life, discount rate, corporate tax, and they also give us depreciation. For me to determine for me to do investment appraisal, I need to identify the cash flows, and they give us some projected cash flows. Okay, sorry, I'm back. So, how do we go on to do this? They give us the projected cash flows from year 1 to 7. So you do your cash flows. Since they give us the depreciation, I deduct depreciation so that I can get my profits. And how did I get my depreciation? I use straight line, which is the initial outlay divided by the useful life to get my depreciation per annum. So I deducted my depreciation per annum to get the profit. Then I applied this tax rate of 30% on the profits to get my profit after tax. Now, when you get your profit after tax, you need to add back depreciation so that you can get your cash flow back. So it's a bit tricky. A lot of you might want to just use this cash flow directly to determine your MPV, but you need to get your profits, then deduct tax, get profit after tax, then add back the depreciation to get this back. So if you just use this directly, you may probably be overstating your cash flows, and which might impact your MPV. So having determined the cash flows from year 1 to 7, they give us cost of capital at 16%. If we do the discount factor, I want to believe everybody knows how to determine this. this discount factor, 1 plus r raised to power minus 1, like that, power minus 2. Then you get your present value. Now, then you get your total, when you add everything together, you get your total present value. When you deduct your initial investments, we get our net present value, like that. Yeah, Ufoma, you have a question?
Now, please, is this how we're going to put it in a table format? Just the appendix, just step by step like this?
Yes. Yes. So you don't need to cram my own step by step. What is important is you'd make sure you correctly compute your MPV. You correctly compute it. You correctly determine your cash flows, right? You can see because why I'm even considering this depreciation, if they didn't give me any information on depreciation, I probably would have used this cash flow directly. If they didn't give me anything on tax, because if they tell me tax rate is this, I have to deduct my tax for my cash flow so that I can get my net cash flow. Because you cannot be appraising a project by using gross cash flow. That will give you a wrong answer. You have to use net cash flow, right? So which is why I'm doing all this first. Then I computed my MPV. Now, then I go straight to my internal rate of return. And if you don't know the formula before, I mean, this is an opportunity for you to identify it as stating your assumption. So I saw that MPV at 16% is a positive this amount. So I would estimate an higher rate of 20%. It's just an estimate. So I approximated that, okay, if I use 20%, my MPV will be 80 million. The reality is this, in the exam, you might also need to calculate MPV again at 20% to get what the precise MPV will be at the higher rate. Because when you want to compute your IRR using interpolation, using a range that should be between 16 and 20%, then the IRR, we are looking at this lower rate plus MPV at lower rates over MPV at lower rates, then MPV at higher rates multiplied by higher rate minus lower rates would give you your internal rate of return, which would fall between that your lower rate and your higher rate. So for me, this 80 million, I just assumed it here. I just assumed it here as 80 million. Ultimately, so you can try to put in other figures. But in the exam, if you wish, you can do the same thing at 20%. And how did I get this 20% is an assumption. So usually when you want to compute IRR, you just add a margin of 5% in between that, okay? And is there anybody in this class, those of you doing SFM, who can tell us what does IRR measures? What does IRR measures?
The expected return that will give you that will allow you to break even
Good.
on the
When
investment.
you say break even, what do you mean expressively?
To get zero NPV.
So,
That is
thank you.
when we okay.
Thank you very much. Yeah, that will give you 0 MPV. Right. Good. So I hope everybody had that. So that's what this is looking at. The internal rate of return, the minimum rate of return that you should get from this project. So we are looking at 18.86%, approximately 18.9% from our computation here. So I'll just advise you, it won't take you so long in the exam to really do. So you can just do MPV at higher rate as well to get your IRR. Okay? Yeah, Agozie, you want to ask a question?
Yes. Sorry, I didn't get what you did here. So you said MPV at 16% is 201. So I understand how we got it. Then you now said estimate MPV at 20%. Assume discount factors reduced by 15%. I don't get that.
Okay, just to keep it simple for you. So let's estimate, let me just remove this for you. Let me just remove this for you. And what you just need to do is just compute again MPV at 20%.
Okay.
Yeah.
So so if you do MPV at 20%, that's how you got 80 million.
I didn't do it, I just estimated.
Okay.
I didn't recompute that again. But
Okay.
you should do it in the exam. So majorly, all this is going to do for you is just to help you determine this IRR using this formula, because you need the MPV at lower rates and also MPV at higher rates. So then the lower rate, the higher rate minus the lower rate, eventually give you your internal rate of return. Okay, so we went on to the ratios. The examiner will give you financial statement of FULAC for the 2 years, or the examiner might tell you that they are acquiring a new company. Okay, the examiner might tell you that they are acquiring a new company, and they will give you the financial statement of that company. So is the financial statement of the company given to you that you're going to analyze, that they would give to you, but the computation of ratio does not change in the exam. It's still the same way. So either one that they give you, that's the basis on which we're going to compute our ratios. In this case, I was given that of FOLAC for 2024 and the forecast for 2025, which are computed for the 2 years. Okay, Usman, I can see your hands up.
Yes, sorry, just to bring you back a little on the NPV computation. In an exam situation, must we go all the way to IRR? Because with the NPV result, we can always know if the project will give a positive return or not.
Yes, you're
IRR, sir.
correct.
That's what I want to ask.
You're correct. So you might not go to IRR, but it's advisable to go there, because it's always good to compare your internal rate of return with the cost of capital they must have given you in the question. I think they even gave us 16%. Yes, this project cost of capital. Did they give us the industry cost of capital? I think they give us 12% somewhere. I think they give us 12% somewhere that I used.
12% is the weighted average cost of capital. But I
Yes.
think from your notes, I think it was an assumption, or you work it out from the equity and debt structure of the balance sheet. I think that's where maybe I think you computed it. It was not given in the question.
Good afternoon, sir.
Oluchi, I'm with you.
Please, how will I identify the type of report to write, if it's external or internal report? And is the
I
format
hear you very well.
Can you hear
Only if you
me?
speak up. Yes, I can hear you now. You said, how do you identify whether it's internal or external report?
Yes, and is the format is the same?
So in the exam, you'll be writing to your boss because you'll be writing to your boss. So you just do from to the normal approach that you used to, because you just do the details to your Oga form to then the subject and the dates. I think we discussed that 2 weeks ago when I was doing one example for you, right? So you can use that as the front page, the front to and the subject of what you're writing. That's what you should do in the exam majorly. So don't really bother yourself around, don't waste too much time around that. So you'll be writing to your partner, and based on the unseen that we have here, where is it? Based on the unseen I have here, so you're supposed to write a letter to your boss, to the partner, about so what you're required to do. Yeah. So you're required to prepare a comprehensive report to the partner summarizing your findings and recommendations. So you're probably going to be writing to your partner. If you check some other diet also, be writing to your boss directly. So whatever it is, just use that as your basis, as your cover page before you move to your appendix. Okay.
Okay.
So let's
Sorry,
let's go
another
into,
question.
yes.
Then how do I formulate the subject? Like what to write as subject?
So it's be stated in the requirements of the question. You can put it as here now. If you want to simplify for yourself, so details of the findings and recommendations on this company, right? Or report on the findings and recommendation of Folak Nigeria Limited on its financial and strategic viability of its investments, like that. So you focus on the financial and their strategic direction.
Okay, so thank you, sir.
Yeah. Okay, so again, I don't understand. Somebody's asking a question. I don't seem to understand what she's asking. But what we have done here is for us to get our net cash flows first. We removed the tax from the cash flow given to us. So they give us depreciation. I removed my depreciation. I removed the tax. Then I got the PAT. Then I added back depreciation because it is a non-cash item, so that I can get my cash flow. Okay. If I was not given depreciation in the correction, I can just deduct my tax from my cash flow to get um, my after-tax cash flows. Then I work with that. Then I use that to derive my net present value, right? I use that to derive my net present value. Then when you have gotten your net present value, it's advisable to also compute your internal rate of return. It's advisable so that you can be comparing whatever rate of return you get with the cost of capital in the industry, which I assume 12% so they might give you that in the unseen, or probably maybe the borrowing rate is 12% or something like that. So the internal rate of return from this project should be higher than the cost of capital for this in the industry, or if you want to go and borrow money. So this project should be able to return much more than that. So you need to know how to do this too. It's strongly advisable. And another thing I've mentioned is your MPV at higher rates. You might have to, I estimated this year. So you might have to do the same thing. You do your cash flow, you do discount factor at 20%, then you get MPV. Then you apply this formula, lower rates, MPV at lower rates, MPV at higher rates, MPV at MPV at lower rates, MPV at lower rates, then MPV at higher rates, then higher rates minus lower rates. So when you apply that, when you do your calculation, you would get this 18.89%. And you would also note that the higher the MPV, the lower the discount rates, the higher the MPV. So a lower discount rate would definitely give you a much higher net present value, which is why I just approximated that, okay, this 20% might be lower. It might not be as low as this, it might be around 100 and something, but you can put your hands to it and try, but try to do this as well in the exam. Then your ratio. So they will give you financial statements of one of the companies. Okay, is either they give you financial statement of Fulak here in this unseen that I'm doing. We're given financial statement of Fulak. The one I will do next week with you, I will do the one where they will give us financial statement of another company that they want to buy. Okay, like so. The key point is you use the financial statement of the company given for your computation of ratios. Okay, Emmanuel, you have a question?
Hey, good morning, sir. Thank you
Morning.
so far for all the insights. Regarding this IRR, I thought if we're estimating IRR, it has to be done in such a way that we continue to re-estimate until we get a negative NPV, and that will be the basis for our comparison. But just
Not do that
to
too.
state, like this 20% now, I felt you're supposed to give us a negative 80 million NPV, but it's positive. Or is there a new change to such requirements?
You cannot do that. You cannot do that in the exam, in this case study exam. You cannot
Okay.
do all that. Yes. So you just have to, when you compute this, whatever it gives you, just use it directly. Don't start searching for, don't waste too much time on that. That would not be good. So you just need to have insight into this. So even in your SFM, I don't think you want to be computing because we are using interpolation, right? We're just using a range between lower rate and higher rate. So instead of you looking at different rates like that before we eventually, so which is why I just looked at a margin of additional 4 to 5%. So I used 20%, I approximated 80 million. So you can compute it and let us know, but don't, even if you don't even compute itself, you might even, it won't significantly impact anything, except if the examiner specifically requires that you do IRR, right? If they specifically say, okay, analyze these projects that this company that they want to start, appraise it using MPV and IRR. So that one you have no choice. But if you are just appraising generally, NPV is sufficient, but it's just advisable to do IRR. So you don't want to complicate it. So this is okay for your purposes here. You're good to go. So again, when you're doing your ratios, you use the financial statement given to you in the question. You'll see that they might not tell you the ratio you're supposed to compute. Under my profitability, I compute just 4 ratios. And for the 2 years, I did gross profit margin, net profit margin, and return on assets. And I also did returns on equity. I computed it. I picked all my questions, all these figures from the question. This sales, this gross profit over sales, this gross profit over sales, this net profit over sales, like that. This is your profit for the year divided by your total assets. This profit for the year divided by total assets. And this is profit for the year over equity, returns on equity, like that. I also did liquidity ratio. And you will see that for my liquidity ratio, I did just 2 ratios. I did just 2 ratios, current ratio and quick ratio. That's enough for my liquidity. And even the question didn't give me, in the exam they will give you, so I just assume inventory is 30% of current assets, just assumed. So majorly I'm seeing the movement in my ratios, which is what's important year on year. You need to also be able to do efficiency ratio as well. I also did 4. These are the 4 key ratios in efficiency. Asset turnover, debtors in days, creditors in days, inventory in days. My asset turnover is revenue over total assets. My debtors in days is trade receivables over revenue times 365 days. My creditors in days is trade payables over cost of sales times 365 days. My inventory in days is inventory divided by cost of sales times 365 days. So I can see improvement and stability in terms of liquidity, right? In terms of liquidity, right? So there's not so much improvement, but it's improving and it's stable, it's constant to a large extent. Gearing and solvency ratio, I did 3 ratio. So except in a diet where the examiner points the ratio you should use. If they don't, please make it a norm. These are the key ratios you should do because they speak to everything around that company. Please confirm that you can still hear me clearly.
That we can hear you.
Yes, sir, we can hear
I hear
you.
you, sir.
Yes,
All
sir, I
right.
can hear you, sir.
Okay, so you see that I computed debt to equity ratio, interest cover, and capital gearing ratio, or which we can simply call gearing ratio. So my debt to equity, I did total liabilities over equity. My interest cover, I got my PBIT. That was why I added back my PBT divided by finance cost. And my gearing ratio is long-term debt divided by long-term debt plus equity. And see, in the exam, you don't have to put this observation there. Seriously, you don't have to. It's not bad if you note it, but you don't have to put it in your appendix. It's not necessary. Just compute your ratio. Why I'm putting it there is just so that when I'm coming back in my analysis, it might be a little easier for me to just to analyze. It might be a little easy for me to analyze with this observation and notes that I've actually placed there. So this is my appendix for this diet. And immediately after my appendix, I move straight to my analysis and findings. And under my analysis and findings, I presented it first. I started with financial and performance analysis. For me, the one I'm comfortable with, I spoke on each segment of the ratio: profitability ratios, liquidity ratios, gearing. And if you look at, when I wrote my analysis and findings, I started with financial and performance analysis. I introduced it, right? That this section evaluates the financial performance and position of FOLAC, depending on the company, and over the period using key ratios in Appendix 2, and the objective is to assess the profitability, liquidity, efficiency, and capital structure. So determine the capacity or the company's financial capacity to support its proposed expansion into FOLAC. So do they have the capacity to fund the proposed expansion? So I started with profitability. I said that the company improved, their profitability improved from 2024 to 2025. I said their gross profit margin increased from 13 to 9, suggesting that they are controlling their costs through procurement efficiency and pricing discipline in terms of their selling prices. I said net profit margin improved, reflecting operational efficiency, despite rising operating expense and finance costs. Return on asset rose from indicating improved. Return on equity also improved from 5.3% to 6.8%, showing enhanced shareholders' value. Now, you will see that for my analysis here, I have actually made it simple for myself in analyzing this company's profitability position or performance by focusing on that, whether it's at improved, and I'm telling them what will have cost the improvement, right? And I know that gross profit margin, if it's improving, is that your cost of sales is low, and because you have negotiated good price with your suppliers, or your selling price is stable and okay. Net profit also, what makes it improve is if you are disciplined in terms of your operating expenses. So an operational efficiency, your overheads are not so high. Return on assets, you are using your assets properly. I'm not giving unnecessary details that are not necessary. So I wrote that because it's not so high. It's not so high. So I just mentioned that the margin is low by industry standard, suggesting that the the company operates on team profit spread, because there is competitive pricing pressures in the vehicle sales industry and limited economic of scale, because all of them are importing. So profitability is going up, they are improving, but this improvement is just, look at it, 13.9 to 14, 1.8 to 2.2. That's the improvement here. It's not transformational, it's just incremental. Okay. So it's showing that this company is steadily improving, but it's very fragile. It's actually very fragile. Okay. So um Yeah, so that's it for profitability performance. Any questions?
Hello, sir. I have a question.
Okay.
This reason that you stated here, like the suggested reason for the increase or decrease in their profitability, did you assume them or based on the knowledge of the unseen and the preseen, you're able to infer that this is the reason why it's occur, or you just assume this is what it should be or something?
So it's based on my knowledge of this ratio, right? So there was nothing in the present that points me towards this. So the only thing I know about this market is that this market is growing, right? And there is competition. There's a lot of competition there. And I know that the margin in this market are high. I think they gave me some trends. So it wasn't from the preseen or the unseen. It's from the knowledge of ratio, which I think you need to adopt yourself. So, and again, usually a gross profit margin of 40% is okay. This preseen, for example, didn't give me that industry data, but gross profit should be close to 50%. Gross profit should be close to 50%. So and those that are selling cars will know that some people even make 100% margin sef in this auto industry. You see some people making 100%. We just buy. Um, so you need to also have an understanding of practically in real life of what is happening in that market. So because I was not given here in this correction, I was not given. So, but I know that it's a very high margin market, especially those that are importing. Though the inventory turnover might be slow, but when they sell, they make huge margin, huge one. So, and if I can't, you need to always, this gross profit margin, this is the direction your analysis should always go. If gross profit margin is fine, it means that your cost of sales is going down. It means that you're able to negotiate good price with your supplier. That's what it means. That's what it always means. So that one, you don't need to. Um, so based on the ratio you have computed from the financial statements, just these two should be your go-to. Procurement efficiency. You have negotiated good price and you're doing a good selling price. Your net profit margin, if it's going up, it means that your operating expenses, your operational efficiency is nice. Your overheads, you are not overburdening your overheads unnecessarily. And return on assets, it means this is talking about efficiency utilization of the assets. You are converting it to revenue. So it's slightly improving. So this one, I need to make this comment just to show that yes, this guy is improving, but that improvement is small, it's marginal, it's not transformational. If you're doing maybe your gross profit margin was 13.9, now you're doing 30%. Yes, that's that's substantial. Now, if you look at their liquidity, so I said it's very tight. Looking at a current ratio of 0.95 to 1 and quick ratio of 0.67 to 1. And they didn't give me any, so it falls below the benchmark. of especially this quick ratio of 1 to 1, even this current ratio 2 to 1. So this implies that the company may struggle to meet short-term obligation without relying on overdraft or supplier's credit. So I said, because of this, their poor performance or their poor liquidity ratio, I said this company appears constrained by high inventory holdings, because when you are selling cars, you usually hold, you need to have a lot of them on display, and a lengthy cash conversion cycle. The inventory turnover and how long it takes them to sell their cars is always long, right? Even though there is a marginal improvement from their inventory turnover in days, it was 86 days. Now it's improved to 80 days from our computation here. Their inventory in days, it was 86, it declined to 80, right? But the overall liquidity shows that Folac Motors operates with limited short-term financial flexibility. So there's a risk if any expense that he did not plan for, or any expansion that he wants to fund, if it arises, it will come as a shock. It will be a liquidity stress or shock on the company, right? I'm driving to something here, right? And ultimately, I want to advise him whether they should invest or not. But I'm seeing that this company, there is not, their holding, their current ratio is not good. Their quick ratio is not good. Basically, because they will be holding large quantity of inventory. The number of days it takes them to sell is long. This is almost 3 months. So I need to mention that they have very limited liquidity situation, or the short-term liquidity flexibility. And there's a risk, it can be a risk for them if they enter into unexpected, unanticipated funding or expenses. So I mentioned that around the liquidity. Now, I went to efficiency. The way I'm moving from the way I did my calculation in my appendix. I went to my efficiency and asset utilization. I said that the company's asset turnover ratio improved from 0.65 times to 0.68. So they are converting their assets into revenue better. And this improvement indicates that management has made efforts to optimize asset use, possibly through more active vehicle sales and service revenue. So you see, this one is not like somebody gave me that information. And what I've done here is to say, okay, the reason why there's an improvement in this asset turnover ratio is because they are selling more. They are selling more. They're increasing their sales, both vehicle sales and service revenue. That's why it's improving. Then I went to the second ratio, which is receivables and payables in days. I said those ones were static at 53 and 73 days. So receivables 55, payables in days 73. So this steady working capital cycle shows predictable cash management practices, but highlight a dependency on suppliers' credits to finance operations. So while the company's control over receivable is stable, further improvement in collection efficiency could ease liquidity pressure and reduce reliance on external funding. So yeah, I'm saying that their receivables is not improving, because if you look at it from our computation here, the debtors in days did not improve. It stood at 55 days. So they need to go out and make it improve, get their money from their receivables. And their creditors in days is also stable, right? Of course, this will show us that this company is, yes, they are not requesting for more days from their suppliers, but 73 days is also long. And that is quite understandable because it takes them a long time to sell. The inventory in days is even longer. But we can say for a fact that this company is relying on their suppliers to finance their working capital as a business. Okay, I think somebody has asked a question. So they said, Madina said we completed NPV and RRR. Okay, we have not gotten to NPV and RRR yet. We are moving gradually. So, well, you know that I told you that there are 3 levels of analysis we are doing: financial statement analysis, financial data analysis, which covers the business analysis. Okay, and there is the strategic analysis. So I'm still on the financial statement analysis. So when we do the financial data analysis and business analysis, that's where we are going to that's when we're going to speak on the ratios. I said the ratios, the NPV and IRR. That's when we'll speak on the NPV and IRR. Okay. So then I moved to the gearing and financial risk. I started with the first one I computed. I said the company's capital structure remain highly leveraged. The debt to equity ratio rose from 5.3 to 5.5, confirming continued dependence on borrowed funds. So this level of gearing is high. It's significant, even though I was not given industry norm, but I can assume conveniently that it's significantly above industry norms. Because look at it now, your debt is 5 times above your equity. So this exposes the company to financial risk in the form of higher interests and reduced borrowing capacity. I moved to interest cover. I said it improved from 2.8 to 3.1, showing that current profits are sufficient to meet finance costs, right? Because this is very good. Even though their gearing is high, but the interest cover, they are making a lot of profits. They can cover their profits and it's even improving. 3 points, they can cover their interest 3.16 times. The gearing stayed at 70%. So seeing that this company is highly geared, I told them that this company must therefore exercise prudence in financing the proposed auto care expansion, as additional debt will further weaken its solvency and liquidity position. Weaken its solvency and liquidity position. So this part of your report is very important. I said in summary, the company demonstrates modest financial viability, but lacks the balance sheet strength to pursue aggressive growth without addressing its capital structure and liquidity constraints. Any proposed expansion must therefore be accompanied by strong cash flow planning and enhanced governance to safeguard sustainability. So, for my analysis above, I'm able to tell that, okay, yes, they are profitable. Yeah, okay. But considering their liquidity states and their high leveraged position, they have to be careful. That whatever expansion they want to do, they need to strategically look at it in such a way that it's not going to strain the company unnecessarily, right? So they need to ensure that they have, I can even say here that they might want to focus more on equity funding than going to fund, and they need to also even collect their money. They have a lot of, their receivables in days is high. They have a lot of receivables outside the market. Okay, do we have any comments on this? So we have already spent 2.5 hours in this class. So we'd have to stop here and continue later with the other ones because my efficiency now is reducing myself. So you have these reports, read it, then I will. What do you say? So read it.
No problem, sir.
I can't hear you. Read it because you'll be required to, you are going to be writing all of this. And this report really has made your work relatively easy because to a large extent, nobody is saying you should go and cram this, but you need to find a way to understand it, which I can see is what most of you are doing. Trying to look at like this 12% we used there. I can see somebody pointing that out. I can see somebody asking me when I was doing my appendix that is IRR necessary like that, which makes sense because what you need to do is this is a strong guide for you. At least in the exam, you know what you're supposed to do. Ratio, depending, MPV, then you move on to your analysis, then start analyzing strategically like that. So I would communicate to you guys on a group where we're going to continue with this. But you know that the exam is just like a week to go. So whenever I asked you that let's meet, just make the sacrifice. After in the next few days, we'll be done. So, but 2.5 hours class, I think is okay for us. If you go beyond this, efficiency is going to reduce. So I want us to move in again when it's high. So we're going to find time, and what we're going to do is just to finish up this one. Then the other variation of this report. We are also going to look at that on another day and see if we would possibly also move to that side. Okay, so let's stop here for today. Do you have any questions, anything you want us to add?
Sir, mine is not a question. If you can just share the video after the lecture, sir, so that we go over it again. If you can share
Before
the
the
video
next
in the
class.
group. Yes, before the next class.
All right.
Thank you, sir.
Yeah, I think you want to ask a question, Emmanuel. So we will communicate on the group. We'll talk on the group on the next
Yes, sir.
convenient time for us. Yeah. Emmanuel,
Sorry, sir.
yeah, I'm with you.
Yes, sir. So the thing is, now it's about in the example, the structuring of of answering the questions.
Of the reports.
Yes, for instance, now, of course,
what?
the whole IRR we did, the computation of the profit margin and all of that. Because, for instance, I don't know the number of pages I'll have to leave if the main report itself has to come first. Or can we do the appendix 1, 2, 3, 4, 5 first before we can now go to the main body of the work itself? So that I will not be able to be leaving.
Yes,
Sir?
We already explained that, Manuel. We already explained that. You have not been attending our class.
No, sir.
We already explained that. We already explained that. Oh, you would start with the appendix and go through this note also. Um, we started with the
Okay.
appendix. Yes, that's the first thing you must always do in the exam because that's the first thing. And don't leave space. Don't leave space. You start with the appendix, you move to your analysis and findings because it's not practical. Ordinarily, in real life, in the structure of a report, I taught you that also, is supposed to start from executive summary, then you move to introduction. But that's not possible here now. You cannot do executive summary if you don't do your analysis and findings because your executive summary is a summary of your findings and conclusion. That's what executive summary is all about. So there's no way you can. So I don't leave space. Just write it and label it appropriately in the exam. That's what is
Okay, sir.
practical for you.
Thank you.
Yeah. So Yetunde is asking, is it possible for the examiner to come and say you should use ABC? No, he won't ask you to use ABC in this scenario, activity-based costing. They won't. Based on the pricing that we are seeing here, it's majorly going to be either appraising investment or you are looking at the the one the segment that will give you the best contribution at the end of the day. How did I get the operating cash flows that we used? They will give you in the financial data. They will give you in the correction. So the examiner will give you the forecasted annual cash flows for 7 years, which was what we used for that.